Good morning, Dennis Smith reporting from the Board of Trade in Chicago. It's Thursday, March 28th. Tomorrow's Good Friday. All exchanges, all markets will be closed tomorrow. Then back to a normal situation. It's a big day, a lot of information coming out. USDA quarterly stocks report and prospective plannings report out at 11 o'clock Chicago time today. Quarterly hog and pig report out at 2 o'clock this afternoon. So the livestock market closes at 1:55, closes 5 minutes before the release of this information. And then the grains, I believe, closing at normal times. But of course, the report comes out. I want to talk about the corn market. Opinions expressed in this broadcast are mine and mine alone. They are not the opinions of ADM Investor Services, nor are they the opinions of Archer Financial Services. Corn market and the quarterly stocks report is probably one of the key numbers coming out today. Quarterly soybean number also key. As I look back on this market, a lot of traders are bullish simply because this number, the quarterly corn stocks number, has created a sharply higher move the last 2 years. But what's changed over the last 2 years is we've really whittled away at corn demand. Ethanol demand is completely flattened out now. Export demand this year has been virtually non-existent. That's a big change for the U.S. corn market. Feeding demand is the wild card right now, but another difference is wheat has been introduced into the feed ration here in the States in a pretty big way. Not just over the last 3 months, but say over the last 6 months. So a lot of indications are telling me this will not be a bullish corn report. You've seen the old crop corn futures pretty strong, but not taking out their February highs. You've seen the basis real strong, record high, in fact. Central Illinois has been pretty much 40 over the board. Now that basis has backed off a little bit. On the recent strength in the board, we've seen the cash corn really move in the country. We've also seen the ethanol boys begin to open up some plants that were closed earlier. They would not be doing that if they did not have the corn already sourced. So I think the corn is available. I think we've altered the demand pretty drastically for corn at these price levels, and I think it's been going on long enough that this number, this quarterly stocks number, is probably not going to be bullish toward the May and July corn futures contracts. We'll see. I'm kind of sticking my neck out, but that's the way I read the corn market. Quarterly, or I should say prospective plantings, we're expecting acreage in both corn and soybeans. I think they'll be slightly larger than last year's actual acreage. And then, of course, we see how the spring goes. A cold, wet spring could alter that a little bit, reduce corn, increase soybean a little bit. It's interesting, though, some traders are trying to be bullish new crop corn because it's too cold and wet. We've got a big area of the Midwest that's going to be waiting on warmer and some drier weather in order to get the corn planters rolling. I'm talking about northern Missouri, eastern Iowa, all of Illinois, all of Indiana, all of Ohio, a big portion of Pennsylvania, Kentucky, Tennessee. These are all key growing areas that will be waiting for warmer and a little bit of a dry out so that they can plant corn in a much better seed bed situation. I do not consider that bullish toward new crop corn. The South has planted corn. They're above the 5-year average, and the latest weather forecast shows increased moisture. So the southern corn crop looks to be off to a real good start. My best play is the short-dated corn put. We're buying May corn, short-dated 550 puts. You're going to have to pay 8 cents probably to get them on ahead of this report. Something we're taking a look at. I look forward to your comments. Dennis Smith reporting from the Board of Trade in Chicago.